All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle Live session. I'm your host, Ryan Carthage. Will be joined shortly by my awesome partner, Mr. Benny Allen. I hope everybody had a phenomenal weekend and a great start to your week. We're going to go ahead and dive in so we can get a quick overview of, well, not a quick overview, but an overview of the market and where we stand today. So as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So first, appreciate you guys and your thoughts and prayers for myself and Benny. Last week was a tough one. So we appreciate you guys bearing with us, and we appreciate the thoughts and prayers. All right. Greatly appreciate all of you. So today we're going to drop in on some fundamentals, see where the market stands. We had some key data released last night, 12:30 a.m. Eastern Standard Time, coming out of Australia. So we'll take a look at that data, see what happened, and then we'll dive into the charts to see how the market has responded to the day after the holiday here in the United States. All right. So without further ado, let's slide over and see what's happening. All right. So, all right, drop me a 1 in the chat if you can A, hear me okay, and B, see trading economics on my screen. All right, perfect. So number one article, Euro at 20-year low. Euro depreciated below $1.03, its lowest since December 2002. As weekly economic data and rising gas prices strengthen the prospect of a widening monetary policy gap between the ECB and U.S. Federal Reserve. An energy crisis in Europe has clouded even further the outlook for growth in the Eurozone, making the ECB's task of taming record levels of inflation even more difficult. The annual inflation rate in the Euro area increased to a new record high of 8.6% in June of 2022, once again above market expectations. ECB President Lagarde said she believes it's unlikely that the Eurozone will return to an environment of low inflation, while confirming a 25 basis point rate hike in July after multiple ECB policy makers called for a steeper increase. Conversely, the Federal Reserve is expected to continue its fast rate hike and raise federal funds rates either by 50 basis points or 75 basis points, right? So over the weekend, we talked about this a little bit, right? And these statements, or this statement, I believe was extremely key in that conversation last week in that conference, right? Saying that the Eurozone will not return to an environment of low inflation. That says, yeah, we might increase these interest rates, but it's not going to be aggressive, right? Because we don't think that it will work. So the euro is going to be in for some, it's going to be interesting in the Eurozone, right? They may continue to increase the interest rates. Investors have already priced in that 25 basis point rate hike. And we'll see how things flow from there to see if they get more aggressive. But based on Christine Lagarde's tone, it doesn't sound like they will. All right. So that's coming out of the Eurozone. Let's check this out here. Major boroughs in Europe failed to hold early gains and moved into negative territory on Tuesday as the DAX losing more than 1%, back to levels not seen since November 2020, while the stock 600 fell 0.8%. Car makers, oil, and gas stocks among the worst performers. European gas price continued to rise, prompting further concerns over economic slowdown or even a recession at a time inflation holds at record levels. and the ECB is set to raise interest rates for the first time in 11 years this month. Meanwhile, fresh economic data pointed at a gloomy outlook in Europe. Those are key words. Industrial production in France stalled. French services PMI was revised lower, and there was a broad-based slowdown in services activity as international demand weakens and uncertainty rises. As uncertainty and rising costs weigh. Okay, so see the tone of a lot of these articles, right? Pay attention to that. I'm going to get to this one here in a second. Oil struggles for direction. WTI futures fluctuated between small gains and losses around $108 a barrel on Tuesday as investors balance persistent supply side issues against concerns a recession will eventually hurt energy demand. In the latest developments in the region, offshore workers began a strike on Tuesday that is expected to cut around 130,000 barrels or 6.5% of the country's daily oil production, according to Reuters. Oil remains nearly 50% up this year as global economic recovery coincided with disrupted Russian supply due to the war in Ukraine. Adding to supply concerns, OPEC has been struggling to pump more crude due to underinvestment, capacity limits, and political unrest in some member states. Meanwhile, oil came under pressure last month on signs of impending U.S. recession, driving Federal Reserve's aggressive fight against inflation. Investors are also tracking China's slow emergence from the virus restrictions and recurring outbreaks throughout the country. Right, so China's coming out of their lockdowns. It's just a little slow, a little back and forth, but they're slowly coming out of it. All right, so oil is ranging. Okay, so that's that. Now, last night, Australia, the Reserve Bank of Australia raised the cash rate by 50 basis points to 1.35% during its July 2022 meeting. The move followed June's 50 basis point hike and a 25 basis point in May, bringing the cash rate to a level not seen since May 2019. The board reiterated huge monetary support was no longer needed due to the strength of the economy and the current inflation pressures, adding that it was committed to taking further tightening with the size and timing being guided by incoming data. The central bank also viewed that the labor market stayed strong as employment remained at its lowest in 50 years, while a further drop in unemployment is expected ahead. The committee reaffirmed its commitment to doing what's necessary to ensure inflation returns to target while paying attention to the global outlook, which stays clouded by the war in Ukraine and its effect on prices of energy and commodities. The board increased interest rates on exchange settlement balances by 50 basis points to 1.25%. Now, this 50 basis point hike is one that was expected by investors. Okay. Investors expected this 50 basis point hike. We'll take a look to see how the market responded to it. But the end of this statement is key, right? They're going to continue to do what's necessary on the global outlook, which stays clouded by the war in Ukraine and its effect on prices of energy and commodities, right? So the war moving forward, and also United States Fed being extremely aggressive in their rate tightening is going to impact those commodity currencies. Okay. So something to keep our eyes on. Like I said, we'll take a look at those Aussie pairs to see how they responded to this move. Okay. Then I want to take a look at, they moved it to the front. U.S. futures point to lower open on shortened holiday week. U.S. stock futures reversed early gains to trade lower on Tuesday as concerns over the possibility of a recession reemerged amid stubbornly high inflation and tight monetary policy. Demand increased for safe haven assets, including the dollar, which appreciated to levels not seen since 2002. Meanwhile, news that the U.S. President Joe Biden may announce as soon as this week a rollback in some of the U.S. tariffs on Chinese imports failed to boost investors' confidence, with many saying it will not have a big impact on inflation. Factory orders are due later in the day, but the focus this week will be on the FOMC minutes released tomorrow and the payroll reports on Friday to assess the health of the economy and the likely path for U.S. monetary policy. U.S. stocks and bond markets were closed yesterday for Independence Day holiday. All right. So investors are not thinking highly of the current situation, right? Not thinking highly at all. They have concerns. So in those concerns, they're not going to be risky with their money, right? Going back to that Australian dollar article, right? If investors are not going to be risky with their money, we're moving to safe haven assets, which means they're going to be moving their money away from those commodity currencies, all right? Moving money away from the commodity currencies, that Aussie likely to take a hit, okay? That's the correlation. That's the correlation, okay? So I believe that was it. Yeah. All right. So that is trading economics over the Forex Factory, right? This is today, that rate statement there, right? Increased as expected by investors. Okay. Fill this out to this week. And yesterday we had the Swiss franc PMI, which came in, right? CPI data, consumer price index, month over month, came in above expectation, right? That's above expectation, meaning inflation is increasing in Switzerland. All right. So today we have Bank of England, Governor Bailey will be speaking. And that's it there. Yep, that's it there. On Wednesday, we have job openings, FOMC minutes, right, coming on Wednesday, which that article pointed at. So we'll keep our eyes peeled there to see what was actually said in the meeting last month, right? Then we have on Thursday, right, non-farm ADP, non-farm employment change, which generally is a precursor to the report on Friday. However, there's been a lot of imbalance as of late as things bounce back and forth. We got unemployment claims also on Thursday. FOMC member Bullard will be speaking as well. And then on Friday, which investors are looking at is here, this non-farm payroll report. Okay, non-farm employment change and unemployment rate and hourly earnings. And then we have unemployment and employment change in Canada. Okay, so this group of reports is going to be extremely important, along with those FOMC meeting minutes coming on Wednesday. All right, so we could see some movement beginning of the week and then stalling as we get ready for Friday. And then after the report on Friday, we'll see how the market responds. All right, so overall, that's an overview from a fundamental perspective. Are there any questions? No? All right, we'll take a look at the dollar. And then we will take a look at a quick peek at oil. We won't go through all the charts on oil, but we'll take a quick peek and then we'll hop out into those Aussie pairs. All right, so dollar index, right? We talked about last week, right? We were looking at last couple of weeks, right? Looking at this range, price pushed out of the range. This is on the 4-hour chart, right? Pushed out of that range, came back, retested, pushed up, couldn't quite get to the D extension off of this move here, came back and retested that zone again, right? And we looked at this on Saturday. We said we could get further push down, right? Retested that range, and we got the strong push to the upside. Now we're coming into the D extension here on the 4, right? And price pushed above and closed strongly above this monthly level, right? So if we bounce back out to the daily time frame and look at this to see that level, we zoom out. This is the last time price was at that level, 2020, right? That's an all-time high, if I'm not mistaken. Let's see. No, I'm sorry, not an all-time high, but ain't been there in a while, right? 2002 was the last time we were above this level. Okay, so this is what that article is talking about here. All-time high sits here. We'll put that in now, like so. All right, so that's the all-time high on the dollar. And we sit just above this monthly high, which we haven't been at since 2002. So now, right, if we close strongly above this level today, right, today, we could be in for this matching D extension to be hit sometime relatively soon, right? Especially if we continue to move into the more of a risk-off sentiment, right? And the dollar being used as a safe haven currency in the scenario, right? You see this shallow retracement and push up. So we're headed towards that D extension there, especially if we close higher today. Okay. So on the dollar, we're pushing up. On the dollar, we're pushing up. So that could tell you dollar crosses, with the dollar being the dominant currency, those will be pushing up. With the dollar being the secondary currency, pushing down. Right. So it's what we're seeing right now on the dollar, right? Pushing to the upside. Right. Okay. So that's where we sit on the dollar, right? More upward movement, closing strongly above these levels. Okay. Over to oil. Oil, like we said, we're ranging, right? Caught in this range here. Caught in this range, right? And this is on the 1-hour chart. We'll zoom this out. You can see it a little bit better, right? Just moving sideways. We pop back out to the daily time frame. We had broken out of this range that we had been in for a while, and we came back to it, right? We came back to it, and we're moving sideways. So oil's trying to figure out which direction is going to go. If China comes out of, if there's reports that China has moved safely out of their lockdown state, we could see oil pick up some steam, right? As Chinese factories and transportation will pick up. They're a primary consumer of oil, right? Or a major consumer of oil. So we could see that push to the upside. Okay. You have some countries that are also starting to decrease their energy consumption from Russia. So that's also giving an impact from a demand side. And Russia's also proactively cutting off oil supply to some countries, right? And cutting down the production of oil from a lot of their major factories in the range of about 40, 50%. So that's also going to be an impact. But potential recession could also be an impact as well, as it will impact just the global economy and people moving and shaking, right? So we'll continue to watch this and see, but right now we're just moving in the range. Okay. So that's oil. Any questions on the dollar or oil? No? All right, cool deal. Let's take a look at Aussie pairs and we'll pop back over to the dollar pairs as well. All right, so this Aussie CAD, looked at it over the weekend, right? So look at it from a daily perspective. And on the daily time frame, last week we hit this D extension. Okay, hit the D extension here. Price continued to press down. Now we're waiting for a new swing low to form on the daily time frame. All right. Now, if we zoom out a little further, this was a look that I have been paying attention to, is this crown pattern on this Aussie CAD pair, right? Which looks like this. Okay. call it a deep crown pattern. Okay, so that's a pattern that I've been watching. So overall, my fib on this one from a harmonic pattern perspective looks like this, right? And if this plays out, we got a 50% retracement. And now we're just tracking these fibs to the downside. Ultimately, you get to the 1618 extension here at 82,387, right? So overall, my bias is bearish on this to the downside. And we're just playing the waves as we move down, okay? So we zoom in on that. We just look at this right tip here, right? Right tip, we turned over, pressed down. We hit the D extension off of the right tip. Now we're looking for a new swing low to form. Once we get that, we'll get a new AB boundary to play. Okay, so we could see some retracements to come, potentially shallow retracements to retest this monthly and daily level that we broke through. Okay, retest those levels. And then we could see continued downward movement, right? We could even see price push a little bit higher, right? 38.2 potentially come back to that daily level, which hasn't been tested yet. Okay, so we could see something like this happen and then a continued press to the downside, right? But overall, I'm looking for downward pressure, continue down through these levels at some point. All right, so as we get to the 4, we look at this and we haven't gotten to the D extension on the 4 yet. Okay, hit it on the daily, haven't hit it on the 4. We got a 618 retracement, price been pushing to the downside, right? Coming out of the weekend, we had price push up, get back to this downtrend line, right? And then we pushed away, right? So we're looking at potential for price continuing to press to the downside to achieve the D extension. Even if we get a pullback to retest some of these levels, which you see it happened already on the 4, right? We could see price come back on the daily and retest the level as well, give us a little bit of a range, and then press down and hit that D extension on the 4 as well. Okay, so just watch out for that. Watch out for that potential action there. Potential Gartley pattern, and then press down. Okay. So as we move to the 1, this is what it looks like. And this is what we talked about on Saturday, right? We had a shallow retracement. We said, we could potentially see price push down to this 118, 127 zone and then give us that retracement. Or we could see price go ahead and pull back. And we got that nice deep retracement already. Okay. So if, right, rules written if then statements. If price does pull back to give us a deeper retracement and retest these levels, right, then we'll look for price to continue to the downside, right? If price does just continue to the downside and does not give us that deeper retracement, right, to get to retesting these levels, we could see the D extension on the 4 hit and the D extension on the 1 hit, right? Because we got that nice 618 retracement already. Okay, we got the 618 retracement. So we'll see if the 4-hour D extension gets hit and that 1-hour D extension gets hit sooner than later, right? So we're tracking this if you're playing this to the downside, right? I took an entry here off of a trend line break. So you got your trend line break to the upside, right? Which we talked about over the weekend, giving us a deep retracement on the 1. Okay, so now we'll take the trend line out for now and we'll look at it from this perspective. Whoops. Right, you run your trend line to the upside here, like so. Okay, like so. We got to push up 618 retracement, right? I waited for a trend line break, got a little pullback to retest that trend line, and I took an entry here, right? So even if price pushes back deeper, right, I put this stop a little tighter, just above that C, right? If you wanted a wider stop, you can place it above the A, right, to allow for that deeper move. But if price pushes deeper, right, I'll get stopped out and I'll look for a retest here for then a potential re-entry. Okay, but right now price is moving in my favor. Okay, so now I'm just managing my stop and managing my trade. So we will see if price gives us this deeper retracement here or if we continue to move downward like this. Okay, so watch this one. And if you're not in this already, see if you get a higher price for an entry to the downside. Joy, order hit 88286. Oh, beautiful. Right in the same range. Right in the same range. That's awesome. Great job, right? Great job. You had a nice deep 618 retracement into our sweet spot, and we got a trend line break to the other side. That's awesome. Awesome. Great work. Great work. Great work. Great work. Okay. So we'll continue to monitor that one and see if you're in this already to the downside. Just monitor your trade, right? If you see price turn over and start to press higher, right, manage your stop accordingly. Okay. Or if you got that wide stop, allow it to press higher, and then we'll look for it to turn over and press down and come back into our favor. Okay. Any questions on the Aussie CAD? And we see too, right? So that news came out last night, which was what investors expected, and they already priced it in. That news came out last night at 12:30, which was here, right? We got some indecision at the 12 o'clock hour, and then we had price pushed down. So it came out as investors expected. They did not come out more hawkish than they did in June, right? They came out in the same fashion, and it was already priced in by investors, and investors have concerns about recession, right? And so they were moving money to their safe haven assets. And we see here, even though the Australian dollar, the Reserve Bank of Australia came in with a rate hike of 50 basis points, it didn't push the market higher, right? Because the fear of recession, the fear of uncertainty, and the aggressive tightening of the United States, right? So you see in this particular scenario, those commodity currencies are not getting a boost from rate hikes, okay? So keep that in mind as we continue to go through these Aussie pairs, all right? Benny, good morning, bro. You just switched over. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
Doing well, man. How about yourself, bro?
Doing great. Doing great.
Awesome, man. Awesome. Glad to have you, dude.
Oh, yeah, absolutely. Glad to be here. Thank you.
Absolutely. So, we're just talking about the looking at this Aussie CAD, but also looking at the fact that the rate hike of 50 basis points coming out of the Reserve Bank of Australia did not increase the strength of the currency due to the risk off fears and the recession fears of investors. Any thoughts on that?
No, I think you hit it. I think you hit it right on the head. You know, just like you say, the sentiment and just the fears of recession, things are tightening a bit. But you know, it's going to be interesting to see how it plays out, because you have there's some numbers and some data that you know that leads some people to believe that is not, you know, when you talk about, you know, a soft landing versus a hard landing, there's some people that think, hey, this still has the potential to be a soft landing based on some of the numbers that are coming out still. So it's kind of up in the air still. You know, it's I don't know. You've got folks that are bears that really want to see the market fall. That's how they're positioned. So you really, you know, you really have to listen to the rhetoric day to day. It's going to be interesting to see who wins that battle.
Yeah,
in regards to the rhetoric, because like I say, you see the data in some key areas that are saying one thing, and then you've got, you know, people on TV and reports coming out that's saying the total opposite. So it's kind of a weird place to be right now.
Yeah. The back and forth is definitely interesting to hear and to watch. Definitely is, for sure. Give me 1 second, everybody. All right. So yeah, that back and forth is definitely interesting to hear and to witness. Like you said before, right? We can fear ourselves into a recession as well. So it'll be interesting to see how that conversation continues to play out. So that's the Aussie CAD. The Aussie Swiss is still sitting in an interesting state, right? So we had CPI data for Swiss franc came out above expectation, which gave a little bit of a boost to the Swissy, right? So we look at it from a daily time frame perspective, and we're sitting right at or right below a B boundary level, right? And we're looking at the potential for retracement to occur. We got a lot of traffic sitting here daily, previous daily levels, right? That price is just hovering at. So we're looking for at some point potentially for retracement to happen. However, if investors continue to move into safe haven assets, we could potentially not see it. So we'll have to watch and see again how this plays out, right? So we're sitting at a B boundary level on the daily time frame. Okay, so as we drop down through the time frames, we see that sideways movement here on the 4. Okay, so we got a break of the trend line. Try to push up above this resistance level here, but we couldn't really close above it. And then we push back down. Okay, so we got some consolidation, some ranging happening. Okay, we also potentially have, once we get to the lower time frame, right, potentially crown pattern formation happening within this range. So we'll see if that plays out, right? But we're moving sideways right now, right? Just sideways movement. So as we get down to the 1 hour time frame, we got a 618 retracement on the 1, right? And you can see here a little more clearly this crown action. Okay, we took out the previous high here, right? And then we pushed back down, right tip, even with that left tip, and we got some hesitation. So we'll see if we get a push deeper here, right? We did get a strong break of the trend line, right? So we want to see how this plays out and if we get a boost back to the upside or if this thing turns over and continues to press down, sorry, right? So on this Aussie Swiss, we would love to see a retracement happen, but it's going to be based on that investor sentiment, right? And investors are looking at tomorrow, FOMC minutes, and Friday. So we'll see if during that time, right, we get a deeper pullback here on this Aussie Swiss. Okay, so that's my look right now. I'm waiting to see if we get. You can play this a couple ways, right? You can run your trend line down here, right? Wait on a break of the trend line to the upside, like so. If you want to play this crown pattern, right, and this reversal potentially back to the upside, giving us a deeper retracement, or if you wait, right, and we zoom back out to that 4, right, and you wait for a break of this trend line and a break above this resistance zone, right? Wait for a break above this resistance zone and a break of the trend line. That'll give you some confirmation, right, that we're pushing to the upside, right? So you want to see a break like that above that zone, come back and retest, and then that can give us some confirmation, say, okay, we're headed to these daily levels. And we'll see if we get to that 38.2 on the 4, and then potentially 38.2 on the daily as well, okay? So if you want to play this a little bit more conservatively and wait for that break, that's what you'd want to wait and look for. Above this level, right above this zone, and a break of that trend line, okay? So if you're looking for that reversal, conservative, that's what it would be, okay? Any questions on this Aussie Swiss?
Hey, Ryan.
Yes, sir.
What's the risk sentiment right now?
Risk sentiment it's below 20. It's in at
Okay.
17.7.
Okay.
It'll be interesting to see if that boosts once the New York session opens.
Yep.
Futures open lower, and they were pressing lower. So we'll see. Yeah.
Okay.
Yep. But the futures market, so the futures market opened higher and then took those gains out.
Yeah.
So, yep. All right, so that's the risk sentiment. No questions on the Aussie Swiss. All right, so we'll see if that occurs there. Okay. On this Aussie yen, we had some great conversation about these yen pairs last week and on Saturday, right? So on this Aussie yen, right, we talked about a little bit of a range potentially happening here. Okay. But we did get a 38 to retracement, price pushed up, didn't quite get to the 118, 127 area and broke back down. And now we're pushing down, right? Broke our, if we had trend lines running to the upside, we got a trend line break there, push back up, retracement, and now we're headed lower. Okay. As we drop to the 4, right? And this is how we're looking at this. It's a little messy, so I'll clean this up for us. Take a look. Hold on 1 second, everybody. My bad. We got some messages happening there. All right, so looking at this Aussie yen, right, from the 4-hour perspective, looking at it moving to the downside, right? Investors potentially moving their assets to safe haven currencies. We got our fibs running to the downside. We got an AB boundary here, right? This was the zone that we were watching to see if price broke out of. We'll take that out, right? So we got AB boundary here, okay? Price pushed back, gave us a 618 retracement, retested this daily level that we broke below. Okay. Now we're pressing back down. So we want to see first, do we stay in this range and just bounce here for a minute? Right. Or do we get just a slight retracement of the strong bearish move down? Right. And then do we get price to continue making its way down, taking out these lower levels? Okay, so that's what we want to see as price continues to move. Okay, that's what we want to see. So as we get down to the 1, we'll see this in a little bit more detail. Fibs coming to the downside on the 1-hour time frame. We got a deeper retracement, right? We got an 8-6 retracement. Price stayed inside that A boundary. We got a turnover and a press down, right? After that news came out, as investors expected, right? We got this breakdown to the downside. Okay. So on the 1, price is moving in our favor, right? If you took that trade off of a deep retracement move there, okay, price is moving to the downside. So we want to see, do we get this continuation after this retracement, right? We could get a little crown action to happen here, right? If that retracement occurs like that, and then we could see that continue and finish to the downside to that 786 level. Okay, so we could be in for a little bit of a retracement to occur, right, throughout the day today, and then we'll see if we turn over and continue to press to the downside. But overall, my bias on this pair and these yen crosses in general is bearish, as investors still have concerns, right? And we could be moving to a more risk-off environment as we get closer to the end of the week, and we'll see how that data comes out. But right now, my bias on this is bearish. So I got a couple of positions running to the downside here, took another one off of this press to the upside, and we're moving in the favor, right? So we'll see if we get a retracement and then a continuation to the downside. Okay. Yeah, it does, Joy. Definitely looks like GJ a little bit. We might get to it this morning. So that's the Aussie yen. Any questions on that one?
Nope.
All right, cool deal. It's Aussie New Zealand. This is an interesting one, right? So on the daily time frame, we're just hovering around this, hovering in this zone here, right? Broke below that B boundary and just been moving sideways, right? We looked at this on Saturday. We said, okay, we'll see if we get a press back up, right? And see how price responds at that level. So as we move to the 4, we see we're still in this range. We got a 38.2 on the 4, right? But we're still just moving sideways. We wanted to see it push a little bit lower, but didn't quite get it. So price gave us this pushback to the upside, came back, retested this daily level, and then we got a breakdown again, right? So rejected off this level 1, 2, 3, 4 times, and we're pressing down. So we'll see if we continue to stay below after this retracement, see if we continue to press down to the bottom of this range, right? That's our range there. So we'll see if we press back down to the bottom of that range, okay? So let's get down to the 1. This is that range again, right? And I had fibs running on this, right? We had a fib to the upside here, price came down, and then price went back up. And it's just bouncing back and forth, taking out fibs on both sides. So if we remove all of this, right, and we just look at it, maybe. I don't want to take that one out. Let's see. Well, let me grab it. 1 second, everybody. There we go. So there we go. All right. So if we just look at it from a support and resistance perspective, right? Go back to the daily. We got a daily support here that I have to add, like so, right? Daily support there. We got another support level, don't have a support level there, right? So this is our daily support, okay? Got the swing low formation there. So we'll take this down to the lower time frames, okay? Box out that range for us, right? So if we just look at it from a support and resistance perspective, okay, without the fib, bottom of the range, top of the range, bottom of the range, top of the range, right? So now we press down and we're getting a retracement, okay? So we could be looking for price ultimately to make its way back to the bottom of this range after a pullback, okay? Make its way down. So if that's the case, we can run a fib here on the 1 and monitor this here, okay? If we get this pullback, 618, 786 level, right? Stay inside that A boundary, we can look for a turnover and a press back down to the downside, right? And a move to finish this fib out at the bottom of the range, okay? So if you want to trade this pair, it's easy pairs to trade. However, right, if you want to trade this, wait for a deeper retracement to occur here, right? See if we get a deeper push and then run your trend line to the upside. Okay. Run your trend line to the upside and wait for that turnover and look for that press down, right? If I was to trade this, I'd be looking at this zone here. I'd be looking at this zone right here. Okay. Price take back some of that bearish candle, right? And retest that level. Previous consolidation happening there, strong engulfing bearish candle, right? Come back and retest that level and then look for that move to the downside, right? So if you're looking for that one, that'd be a setup I'd look for on this pair, okay? Any questions on this Aus New Zealand? Other easier pairs to trade, but there's an opportunity there if you're looking to trade it within this range, right? That range is 130 pips, right? So if you get that nice retracement there, you're looking at 110 pips to the downside, which is a nice move, nice week, if it plays out that way. All right. Cool deal, no questions. We'll keep rocking. Aussie dollar. I missed this one last night, but on this Aussie dollar, right? From a daily time frame perspective, we hit our D extension last week, right? So now we're waiting on a new swing low to form, we got price pressing to the downside, right? In favor of the dollar, we looked at the dollar pressing to the upside, right? As investors are using the dollar as a safe haven currency based on that previous article, right? So dollar pressing to the downside here. So we'll see how the day closes, but we could get this candle to press lower. If it breaks that low, we still want to have a swing low, right? So we want to wait for a swing low on the daily time frame to give us that new fib. Okay. So let's go down to the 4, right? Our new fib did not pop in. However, this is that fib there. Okay. Swing low there. We got a 38.2 retracement on the 4. Came back to our down trend line. Okay. Ran a trend line from the upside down, came back, retested the trend line there, and now we're getting this press down. So we'll see if we're able to break through this daily level and continue that press, or if we get somewhat of a double bottom action and a deeper retracement here. Okay, so this daily level is going to be key for us to watch. Okay, and that'll also be key on that daily time frame. So if we break through that and continue down, which won't give us a swing low, but if this level holds, this daily level here, and we get a double bottom and a push deeper, right? Then we'll get that swing low on the daily time frame, and we'll get a deeper retracement here on the 4. Okay, so this daily level is going to be key for us to watch and pay attention to as we move through the day. Okay, so keep your eyes there, right? Try to break out of that trend line, but we couldn't do it and press back below. Okay, so could potentially also be in a range, right? Potentially until tomorrow, or even until Friday. So we'll continue to watch the data to see, and we'll watch these charts to see how they move, right? But that daily level is going to be key. If we get a break below, right, we could get pushed down, retest, and then that continuation. Okay. If it doesn't, if that level holds, right, see a deeper retracement like that. And we'll look to see how price responds at the 618 level, previous consolidation zone, in line with this outer trend line here. Okay, so that's the look on the 4. As we drop down to the 1, right, similar deal. AB boundary, shallow retracement. Price did push down to this 118 level and gave us a retracement, but again, right, ran into that trend line. Didn't get to the 38.2 on the 1, and now we're pressing back down. Okay, so we'll watch this and see if that daily level holds, and see if we get a turnover and a double bottom and press back up, or if we get a press below, and continuation lower. Okay, so be patient there, and we'll watch it and see. Okay, so that's the Aussie dollar. That's the Aussie dollar. Questions?
Hey, Ryan.
Yo.
Hey, can you go back to the daily for me?
Yeah.
Right. So if you look at, right, sometimes, because I had to get used to it, right, when I learned how to swing trade, because sometimes you come in, well, depending on how you're introduced to the game, you come in and you look for things every single day, new trades every single day. But when you swing trading, things are a little bit different. Yeah. So if you look at it, how long ago was it that we called the double top in the zone on this trade?
Beginning
and
of June.
That position has been moving down ever since.
Mm-hmm.
Right. So when you're swing trading, we cover the charts every week to look at the progress on certain moves, to look at maybe there's opportunities on a move that we've been in for weeks where you can actually add a position or maybe get into it for the first time if you've missed it. But there are opportunities and setups that will cover that it'll run in that direction for weeks at a time. I mean, we called the double top in that zone on the daily on the Aussie dollar. That seems like forever ago now, and it's been moving down bearish ever since.
Yep.
So we always say, there's no correlation to the frequency or how often you take a position in the market and more money. There's just no direct correlation for that. So this is one position that we spotted weeks ago now, probably, right? I think it is. That has been running to the south every single cent. It's been bearish ever since that double top in the zone. Right.
Yep.
So this is literally one position that you could have taken and just sit in it. Right. Is that the extent? How many pips is that now?
Off that double top, sitting at 500.
Right. So just think about that as you're trading. You know, there's days and weeks where you may not get involved in the setup, but you've got these trades and these setups running in the background. It's just accumulating pips for you. So I just wanted to point that out for everybody to keep in mind, that you are swing trading, right? For the most part. Yeah, there's some of those positions, short-term positions that we find from time to time, but overall, always running in the background are these swing positions that is just, it's kind of on autopilot. It's just, once you get the direction right, it's just making money in a certain direction for you. So always remember that you don't have to be so anxious to always be in the market, right? Just like how we get up and we go to work every single day because it's how we make our money. Trading is a little bit different. You know, it's a little bit different, especially when you're swing trading. Now, I know a lot of you are still trying to figure out what type of trader you want to be, but I just pointed out just so you understand how powerful and how big these moves are in the market that we're spotting.
Yeah, I appreciate that, bro. I appreciate that.
Yep,
that's key. That's also where the patience comes in. It's also where the patience comes in, to allow the market to do what it's going to do. Take your hands off of it and allow it to play out, right? So as we hop over and look at some of these, I'll look at some of these dollar pairs that are starting to move in our favor now. You'll see Benny's point, right? So on this dollar CAD, right? Let me clean this up. But on this push to the downside here, right? We're looking at, okay. What I got running here? I don't know why I ran two of those, but let me take that out and look at this most recent move here, right? So monthly resistance, we retested and we pressed down. We had a shallow retracement, price pushed down to the 118, 127 zone. Then it kind of ranged a little bit, right? It ranged a little bit before price pushed to the upside. So it just takes some time, right? And now it's moving in our favor, pushing up, right? Or this dollar Swiss, which trickled to the downside, right? Trickled to the downside, gave us some consolidation, and slowly started to make its way up, right? And these are going to be positions that we sit in, right? This dollar Swiss, right? This was the turnover from a daily time frame perspective. Slowly made its way down before we got a shift and a push up, right? As long as the dollar continues to rise, we could be looking at price coming back to this 998,579 level, potentially beyond, right? But it's just going to take time. Just going to take time and patience to allow it to do what it's going to do, right? So off of that, moving to the upside, it's 300 pips to the upside. It's just going to take a little bit. It's just going to take a little bit. All right, so that's moving. Take a look at a couple of these yen crosses as they are. Look at GJ. Joy mentioned GJ. As we looked at that Aussie yen, right? I'll take a look at the pound yen. And look, had almost a triple top on the daily time frame. All right, clear double top there, one touch, two touch, press down. We got a deep retracement off of that last push, and now we're continuing to press to the downside. All right, continue to press to the downside. So as we drop down to the 4, and we look at this move to the downside, right? Again, these are ones that we looked at last week and we said, all right, let's watch. Let's watch and see as they make these retracements, see how they play out. And they all broke down to the downside, right? On Saturday, looking for those retracements to happen, right? Close on Friday, said watch for the retracement and see how the market responds as you get those deeper retracements, okay? So here on the 4, we got a 618 retracement, price turned over, bearish candle, pressed down, okay? So we're pressing to the downside, right? Pressing to the downside. Now for this double top, if this plays out generally how double tops do, right, we could be in for a move coming at least back down to this daily support level, potentially the weekly support level, right? That's going to take some time. These are large moves that have the potential to play out, right? Just from this daily level to this daily level is almost 560 pips, right? If you took it off of this retracement here, you're looking at 1,000 pips. If it gets there, 1,200, right? These are colossal moves that we have the potential to sit in, right? You just got to sit on your hands and be patient, right? So just play the wave. 618 retracement, matching the extension as is at this daily support, right? So off of that entry, 700 pips. Just got to sit and let it play out, right? Just got to sit and let it play out and be patient. Okay, so price is pushing to the downside there. Came back, retested the trend line, tried to break above, similar to that Aussie yen, as Joy pointed out, right? Tried to break above that level, press back down below it, right? Press back down below. So we'll adjust it as it's pushing back down to the downside, okay? So as we get down to the 1, right? Take a look at it. This was the range I was watching, right? Top of the range, bottom of the range, gave us a retracement, didn't get back to the top of the range, but we're pressing down, right? But we're pressing down. This dotted line is my entry here off the top, and just letting it ride. AB boundary, shallow retracement, 118.127. This was that beautiful retracement, right? Friday started, right? Sunday, we saw this move really take off and push up. 50% retracement, just shy of the 618. And we got to turn over and press back down, right? So now we're looking for this to continue to the downside, get to these lower levels, right? So this is the move we're looking for here. See if we get this to continue down. Okay. 64892. Right in this range here. Great work, Joy. Right? Great work. Press back into the zone that it broke out of, right? 50% retracement. Joy took it off the trend line break to the downside. Beautiful. Beautiful. Right? You have your rules and you stick to them. You can make money in this game, man. Make money in this game, right? But you got to have the rules and stick to them, which we teach those in that training in your back office, right? But broke a trend line and we got to break down to the downside, right? So we're looking for this one. Has the potential to continue down to this daily support level, and we'll take a look to see what happens there. Okay. Got another level here. All right. So that's the pound yen moving down, moving down. Okay. Any questions on the pound yen?
Nope.
Cool deal. Euro yen. Similar conversation, right? On this euro yen on the daily time frame, we didn't get a 38-2 retracement, right? And we pressed up 118.127 zone. We got this consolidation, couldn't get to the D extension, stalled at this daily level. Triple top, 1, 2, 3. And then we got a breakdown, right? So now we're stalling at this weekly level. We want to see if we can break below it to continue this movement to the downside, okay? See if we break below it to continue that movement to the downside. Okay, so as we go down to the 4, This is that look, right? So here, AB boundary, shallow retracement, 118, 127 zone, right? If you run your fib to the upside, your entry off for this one would have been here, right? If you didn't catch that and push back up to the upside, right, you would have adjusted that because it's sideways movement, right? And you got a double top action there. So get as close to the highest point as possible without taking out any wicks or bodies. Bang, right? So now push up, right? Retest your trend line, break back below, and you're on the move to the downside, right? Shallow retracement 118, 127 play. You got two opportunities to enter that. And now you got to move, right? Now you got to move to the downside. And it's a beautiful one. Strong bearish candle. We might get a pullback, take back some of that bearish movement, right? And then we'll be in for a continuation down. Okay. So as we drop to the one, that's how that looks, right? That's how that looks. So if we bring this 4-hour fib, just so we don't confuse everybody, bring this 4-hour fib down to the one, like that. This is that 4-hour fib. This is that shallow retracement, 118, 127 play, right? This was our trend line to the upside. Here's the move down. There's the move down. Trend line break. Got some consolidation. We got to continue to move down. Right? So now we're looking at price coming back to this daily support level. Right? We got a 118 level off of 8.6 retracement off of this fib. Push down here. Right? Daily support level is the next level we'll watch. And we'll play the waves. And then we'll see how the market responds at that point, right? But like Benny said, these are large moves, right? Off of this entry here, that's 200 pips already.
I do got a question.
Yes, ma'am.
So, in this, I guess I got mixed up when I read this. When the market hit the D on the 1 hour, and it begins to form the D with the two candles with the 5 candle formation.
Mm-hmm.
Dang, I lost my note. I'll ask later. I have it. The question written down is just upstairs. It was
this on here.
Yeah, and I guess and I always ask this question about when it hit the D. We're technically looking at that D at that previous extension, right? Because we're waiting for this one to close. Because
so remember you hit the D extension level, right? But your boundary doesn't form until the swing low forms.
Okay, on one of my charts, and maybe it's just Smart Trader, the fib is closed, but it did not break above the A, and it didn't even get down to the D extension. So I was trying to figure out why that fib went inactive.
What pair?
I ain't on my computer.
Oh, okay, no, y'all good.
I'll send it over.
Send it to me, right? And we'll take a look at it and see. Because sometimes the algorithm gets messed up, but also the level could have been hit by 1 pip, right? And so you could be looking at an extension that did actually get hit, but it might not look like it hit the retracement, the corresponding retracement level.
Okay.
Right. So we'll have to look at the actual numbers to see, did it actually hit the retracement level? And then what that extension would be.
Okay, because I need to learn how to just set it and leave it alone, because I be putting sub fib to a sub fib, and then I open my chart. So of course all them fibs had overlap. So, but when I fixed it, I was like, okay, is this still wrong? Because then I went from 2 fibs to 3. So I was like, okay, I got a new boundary. But why did this? It just looked like that it didn't get hit. So I'll send it over.
Yeah, we'll take a look at it for sure.
Okay.
Sure. All right. Any other questions? This is the euro yen. Any questions on anything that we covered this morning? No. This game is about patience, man. That patience comes from the work that you do on yourself. The mindset piece. Understanding you, understanding what makes you tick, and then building rules around ensuring that you can keep yourself in this range, right? Understanding of self. New folks on this call, you'll start to see as you study, right? As you put the work in, you'll start to see your characteristics, right? Personality traits in these charts, in these markups. You'll start to see your own tendencies play out. So that's where the work comes in, to continue to work on you as an individual. Strengthening your mind, strengthening your body, pressing yourself to become more disciplined. We're working on it too. We're not perfect. We will never say that we are, but nobody is, right? So if you haven't started going through the training, I strongly suggest you start going through this training, right? For those that haven't logged into their Inner Circle back office yet to see the training, log in. forextraderoom.com. I'm sorry. Yeah, the forextraderoom.com /login. Go there, start going through the training. It's imperative. It's imperative. It's imperative. It's imperative. Right? The training is what's going to help you make progress in this game. Right? And then attending these sessions and asking the questions that are necessary to help you put the pieces together. Imperative, man. Benny, you got anything before we close out, bro?
No, sir. Great session, man. And I look forward to seeing everybody this evening, 9 p.m. Eastern Standard Time.
Yes, sir. Appreciate it, man. All right, everybody. You guys have a phenomenal, phenomenal Tuesday. Like Benny said, I'll be back tonight, 9 p.m. Eastern Standard Time for the Asian session. See how the market responded throughout the day. We'll get some updates on these setups that we looked at over the weekend. All right. Have a phenomenal day, everybody. We'll see you tonight.
Thank
Peace.
you.
Thank you.
You're welcome.
Thank you.
Thank you.